Afternoon. How are you doing? Sorry I'm late. I was doing stuff. Busy doing stuff. How are you doing? Right. So I've been out all morning, just trying to catch up on stuff, and then live room comes along and I didn't realise. So I've just been working on this new bit of the website. Under the recommended bit here. There. You can't see it, can you? My head's in the way. Let me get my head out of the way. One sec. Yeah, this bit up here. The recommended bit on this page. I've just put up a very quick version of what I'm going to do with the prop firm comparison. So this basically is, at the moment, I've got Audacity, EA, Fidelcrest, FTMO, Citi, My Forex Funds, the Fivers, True Forex Funds, and Surge Trader. So at the moment, I've got all these firms up there. Basically, you can click the links which takes you through to them all. And it basically gives you all the information about every element of them, basically. Yeah, so minimum accounts, maximum accounts, minimum trading days, maximum trading days, payout periods, how much you get as a profit share in month one, how many phases there are, what the targets are, the max losses, whether you can use EAs or not, whether there's free trials, whether you can hold over weekend and news, what leverage you get, whether it's MT4 or MT5, whether it's instant funding, whether you need a stop loss, and it gives you the prices for every single level offered by each prop firm. Yeah, so you could say, basically, I want to have a prop firm that uses EAs, and I want to be able to use MT4. Yeah, and it will give you basically, those are the ones you can use. Yeah, so you can use E8 standard or extended, My Forex Funds evaluation or accelerated. Yeah, and then you could say, right, I don't want one where I have to have a minimum amount of days. So you could say I want to select just those ones which have got 0 trading days. Why is that? Oh, that's max days. Sorry, minimum trading days 0. Yeah. FTMO's got 10. Why does that come up? Oh, I suppose it's because it's got a 0 in it. But yeah, I'll have to fix that. But anyway, yeah, so there you go. So it gives you all the information, and then you can basically go, right, I want a 100K account. Who's got the cheapest? Ta-da! That one. EA funding. Click the link. Off I go. Sign up. Okay, so I've made that for you. Aren't I good? So that's basically, it's for me as well, because I wanted to see what they all are. So there you go. That's what I've been working on today. Well, say today. Been working on it for a few days, but just managed to get it up today. Anyway, how are we all? Connor, Alex, hello, morning. The court is in session. Morning whipping post, afternoon even. Afternoon Diamond, Figania. Afternoon Seymour. Do you have a link for the E8? Do I have a link for the E8 cap? No. Don't use 8 cap. They're crap. That's why I call them 8 crap. E8 though, yeah. E8, there you go. Just go to the website, go to that page. Go to this page. There's links there to E8. Afternoon, Fletch. Afternoon, Gerard. Daniel, Jason, John, even. KB, Oliver. Nicer. Although there's a lot of data in there. Data's more important than looking nice. So it's more of a tool, because I keep going in here, I keep going, yeah, but they're crap because, yeah, but they're crap because, yeah, but these are the best ones because. Now you can go there and you can filter it all to whatever your requirements are and say, that's the one I need to use. So targets, phase 1. You know, if you sort it by phase 1 target, that doesn't work, that filter, does it? Because that needs to be numbers. I need to redo some of these filters. But I need to redo some of this data, basically. But yeah, say I just want one that's 5%. Yeah, so Fidelcrest is your only one if you want a 5% target, that sort of stuff. So you can find it all out now anyway. There you go. It's on the website. Right, so market doesn't seem to have moved a lot today. We're kind of back to where we were with the Dow. FX-wise, we've got a few ADRs. We'll go through the ADRs. We've got a few RSIs as well, so we'll go through those. A bank 1.4%. Other than that, not really done a lot, is it? from what I can see. Everything is a very wiki today. I'm not quite sure. I don't think the market's really got much of a direction, but we've got a few bits and pieces that has moved, so we'll look at those. But seems to be a bit of a funny session today, which is, it's after a bank holiday weekend, so it's not surprising, is it? Hopefully get Lee on soon. Tradecast podcast. Evening all, outro. Outro here, just using my podcast channel. Ooh. Stop trying to promote yourself. David, afternoon. Honestly, I've gotten tired of wasting money on funded accounts, so I put my live capital on a live account and running on the H1 mean reversion. That'll do. Please, gold. Please, gold. Buy or sell. Wait for it. Gold. Gold. I got some for sale if you want. Pick this up on Amazon for $12.99. Right? You can have it for $129.99. It's proper gold. But just to appease you, please note I am covering gold at 9 minutes and 30 seconds into the stream. Next time you want gold, 9 minutes and 30 seconds into the stream. Gold is a cross with the US dollar. It goes up and down depending on what the US dollar does. What's the US dollar going to do today? I don't know. It's going to go up or down. So at the moment, I would say more likely a sell because we've got these big old propulsion gap targets to the downside, and the US dollar is probably going to strengthen up this week because it's got lots of news, and the Canadian dollar interest rates are going to remain as they are, which will be bullish CAD, which will be bullish US dollar. However, we've got this propulsion gap to the upside, so it might come up here first before it pops down to there. But if it doesn't do that, it'll pop down to there, and then it'll pop up to there later. So right now, you need to decide whether you want to go long or short. And I can help you with that. It's a short today. Yeah, so there you go. Short gold. Where was I? KB, purchase the Breakout EA. Do you run that daily and let it take trades for you, or do you use it as a more discretionary indicator? No, so it's running at the moment on 2 prop accounts, the opening range Breakout EA, which has just opened. There you go, there's the market open. So there's your pre-market 15, which I am not trading at the moment. It's too volatile, the pre-market 15. So the Dow, wow. I want that to go down today because I've got a short running on the Feedor Crest account. That'd be lovely if this collapses today. So yeah, I run it on 2 prop accounts at the moment. But I'm personally finding it a very hard strategy to trade because it is a stop loss. I struggle with stop losses, as you know, which is why I do what I do. I think from the back testing, it's a very difficult one, the opening range Breakout EA, because all the set files work, but all the set files work long term. And you've got to let them run, sit there and let them run. Had a bad month in March, made a loss on both accounts. Blue one account made a loss on the other account. The other one that's running is actually doing okay with the DAX, but not doing great. It's a slow burner, and it's one of those things that's going to generate you around about 20-30 grand a year. So it's not going to make you huge returns because it's going to have ups and downs because it uses a stop. So, but I'm running it on prop because I don't want to risk it on my own money at the moment. And it's doing okay on some and not on the others. The NAS is the one that's killing it at the minute. The NAS is the one that's most profitable in back testing. In live forward testing, though, it's the most volatile, crazy monster in the world. So I don't know whether that's market conditions at the moment or whether that's just in general. The Dow seems to be the one that is going to make the most money. As you can see, it's more stable. So if we look at the NASDAQ and what the NAS is doing at the minute, actually, it's not doing too much different to the Dow today for a change, but usually the NAS is off in a completely different direction to the Dow. So today, though, seems to be okay. So there's your 5-minute opening range on the Dow as well. Just taking out that low. That's the NASDAQ rather. And the Dow, nice big 5-minute opening range there. So if it pulls back inside somewhere in there, literally it's an ORB up or down on the 5-minute range. or 15, depending on what you want to trade. But the 5 is still the best, I think, because that's when the opening cash balance is in. So, afternoon, Luke. Brian needs a towel. Morning, Hamza. You should start a gold-only podcast. I should do, shouldn't I? What's gold going to do? Oh, such a tricky one. Anyway, not looking at that. What I'm interested in is oil, because I'm short on oil now. So with the funded accounts, it's coming down a little bit. That's good. With the Fidelcrest accounts, I should say. Done 1.26 today on this one, sitting in drawdown, waiting for the Dow, basically. The Dow is the thing that's absolutely killing this account at the minute. It was getting better. I've scaled in really aggressively on this up here, mainly because I want out. So what I'm looking for is a retest down here somewhere to try and get out of this. So I've got in quite aggressive on this. I've done some aggressive, not drawdown control, but aggressive, just want to get out of the thing. Because it's kind of ruining the evaluation at the moment. But we will see what happens with that one. Oil, I got into short this afternoon. Let's do it on the other one. So gap fill is obviously underway. Well, a gap fill is what I'm looking to target. So I had a pending order sitting underneath these lows, which just got triggered, and we're pulling back. So if you look at it from a market structure perspective, since we put in that high, we push down, put in a new low, then we put in a lower high, then we put in a double bottom, then we put in a lower high, then we put in a double bottom, then we put in a double top. Now we've put in a lower low, after that lower high. So the structure is range bound, but contracting kind of down into a possible falling out of bed. So I've got this short on, which I put on with the Fidelcrest account. Whoops, wrong one. There, which is that break. Anticipating basically, I've just tagged into the second entry. Sorry, yeah. So what I've done, what I did was I got into that short there. We pushed down, triggered the short, and as soon as we triggered the short, it pulled back. So what I'm looking for is a lower high. Yeah. So what I've done is I put a second pending order just underneath that high. And what I'm looking for is market structure to break. So the market structure I'm looking for is this. Yeah, and then a new low. If we can get that new low, I think we're going. I think we're going to get the gap fill. So I've entered a second short there, which, as you can see, my average is there. And I want this to basically collapse from here. So that's the play on oil. It'll either work or it won't. If it doesn't work, it doesn't work. It's either going to do that gap fill or it's not. It's not really. If we break that low, as you can see, I've got a sell stop there as well. I'm going to pile into this. If we break that low, we're doing the gap fill. It's not as if we're going to go, oh, I'll break that low and then I'll sit around here for a bit. It's going to do that. Or it's just going to run. And if it runs, I'll get out of it. But yeah, so oil, fingers crossed. Out for half R on the NAS. Let's have a look what we're doing. If you're trading that crazy NASDAQ beast, you must have been pre-market, I guess. So yeah. So there's your opening range on the two, basically. So that's your opening range on the Dow. That's your opening range on the NAS. So break of those. We'll see if we can get a run. Would be nice to see this wake up, because the DAX this morning was very, very, very quiet. Literally, all the DAX did was, remember we looked at this morning, we got the gap fill. So I didn't play this morning, but the gap fill play was what we were looking for, which we did. And that's it. Literally got the gap fill. So we've got a little propulsion gap to the downside. There's no targets to the upside on that one either. So it's all downside targets. And don't forget, we still haven't filled those gaps. Yeah. So we got these two big, well, that's not very big now, but that big gap down here on the DAX to fill as well. So we've got that high that we made last week. There's last week's low. So looking for that to be our new lower high. get that lower low in and head down to do that gap fill. Hopefully that will drag all the other indices down. However, we're in kind of a greed market at the moment, so it might be that we see some bullishness in the indices. We'll see. Today will tell, hopefully. First day back out of the bank holiday. NASDAQ looks like it wants to go short. Dow's stuck at the minute, so we'll see what happens with those. You can come on mine and just talk about gold for an hour. I'd love to do that. Come and talk about gold. I'll put my bling on. It's just like, I'll get blinged up and we might put a bit on the mic. And I'll just sit here and talk gold. Because I know everything about gold. As much as I hate it, bling, I actually really like it. Anyway, not talk about jewelry. Right, pound New Zealand, do you want to have a look at? We'll have a look at that. I've got shorts on the pound New Zealand at the moment, just scaled out of one with a drawdown control this morning. We're 125 ADR on this. Sorry, no, we're not. We're 100 ADR. We'll look at all of these because these are ADRs. Pound New Zealand at the minute, if you look at it from a bias perspective, the pound is fairly mixed at the minute. Most of it's range bound. Pound yen is the long. That's basically because of retail sentiment at the moment. That's kind of more of a +4 at the minute. But everything is kind of neutral to short on the pound. However, the pound is just grinding along at the moment. So pound New Zealand is range bound. At the moment, retail is all short. So therefore, we want to be longing it. And basically, it's pushing up, as you can see at the moment. Retail is all short, remember? So retail has all of its liquidity at the highs. So therefore, we're pushing up at the moment. We've just taken out that high. At some point, we will take out the last high and drop back to this propulsion gap. So I think I've got a short running on the Fidelcrest account on this, on the other one. Yeah, so I've got short running on this at the moment. That's what I'm stuck in basically at the minute, pound New Zealand. So I've scaled in again a little bit aggressive on this. Well, no, not aggressive. I've stopped out of one, as you can see today. I've taken another short as we came off of 125 ADR, although I don't think that is 125 ADR because of the size of that candle at the open. I think this is more of an ADR hit rather than a 125 ADR. And I've got a sell stop here, which basically the idea of this sell stop, which is this order. No, it's not. So it's this order here, the second one. You can't see the first one. It's there. It's really hard to see, actually. But there's my order. My pending order is there. So what I'm looking for is a reversal alert. And that will trigger a second entry. That will bring my break even up to here. And I'm looking for an exit down here. However, I might exit here, dependent on what the state of play is with all the other positions. Because I'm 2.86% to target. So I've only got to do 5%. So I'm over halfway to target. So if I can get out of this pound New Zealand for a break even and everything else is looking like it's working out, then I probably will do. So I'm just looking to get this average up above this level, really, or around that level, so I can give myself the option to get out when we come and retest that gap. But so yeah, like it's short at the moment. Dow's not really doing anything at the minute. NASDAQ's broken to the downside. So your opening range breakout is short on the DAX, the NASDAQ. It's God's law, isn't it? I stop trading the NASDAQ and the NASDAQ does an ORB. I start trading the Dow. What's the Dow do? Sit with inside its opening range and do nothing. Can't win. Doesn't matter which one you pick. UA New Zealand 125 ADR. Aussie New Zealand as well has hit. So we'll look at all these ADRs, shall we? So Dow looks like it wants to break to the upside. Still an inside bar at the moment. Right, so ORBs, ADRs today. Fidel phase 1 passed today. Sending in docs. Well done, Brian. Good job. Afternoon, Dwee. How are you? Afternoon, PM. Good job. Passed Fidelcrest. Nice one. It's fairly easy to pass, isn't it? It's 5%. You can sneeze on one of the indices and accidentally make 5%. If you get the right direction, you've got 50-50 shot of passing, haven't you, with 5% target. Aussie dollar, New Zealand dollar. So we looked at this one this morning. Debatable whether this is actually an ADR. This whacking great wick here is around about, I think, what do we measure it at? This candle? 40 pips. It's half an ADR. Debatable as to whether this is actually an ADR today, but it is an ADR hit to the upside. So if you're using the opening range breakout EA, it will be getting you into this. So that's a big ADR hit, possibly, not sure. So you've got short opportunity there. It's not 125. It's pretty much ADR, I would say. Euro CAD is the other one. So that's an ADR hit to the upside as well. That one's come off of ADR quite nicely. It's not drawing in data properly for some reason. So you've had your reversal alert, M pattern, target there, or down here really. Half an ADR is 45, which is kind of this propulsion here. Yeah. So just before we started that run, that's kind of half an ADR target from where you got the reversal alert. That's a little bit tight, but if you wanted to get into it now on the retest, probably a good spot. Euro New Zealand, extended to the upside, 125 ADR. I'm in short on this already. This is an H1M5 mean reversion, so we're extended on there. We got a 5-minute reversal alert, which has been invalidated this morning. So I'm in short on Euro New Zealand. That one's not too bad, actually. If you look at the candle that created that huge wick there, that's 44 pips, which is just over a quarter of an ADR. So when you look at us being at 125 ADR, if you were to exclude that candle, this is an ADR hit or 125 ADR, depending on what your broker's painted down there. So that is nice ADR hit to the upside. It's hourly RSI extension to the upside as well. Very nice target to the downside, which is at a previous resistance. So this resistance area here, we finally broke it, turned it back into support and bounced. This is still in play, this propulsion gap. We didn't fill it. And you've got a propulsion gap here on that break as well. So there's an easy exit there. That exit there is 74 pips, which is half an ADR. So that is exactly where I will be getting out on that trade. So that's good as a short. Euro New Zealand, it's pushing up at the moment. Looks like we've got a weak New Zealand dollar. Yeah, everything's pushing up against the New Zealand dollar at the moment. So New Zealand dollar is weak. That's why. Euro US dollar is the other ADR. That's broken to the upside. There's your 15-minute opening range. That's not what I wanted to see. I wanted to see that break to the downside, but never mind. We'll see where it goes. So Euro US dollar. Whoops, wrong dash. Euro US dollar. ADR hit to the upside. Again, if you look at this on M5, when it's painted, you got a whacking great candle there, 15 minutes or 10 minutes into the open this morning, which is around about 10 pips, which is not much, but if you look at it as an ADR hit, it's given a lovely reversal off of ADR, but it's again debatable. We had a very, very light liquidity this morning, so there's a lot of big candles. I've noticed this across all brokers that I've got. They're all doing the same. My Forex funds has got very big wiki ones as well this morning. Pound New Zealand is the other one. Again, we know about this one. I'm short on this already from down here. Be looking to get into a second entry on this at some point. 150 I need for a second entry. But that's a nice ADR hit to the upside as well. Just had a reversal alert on it. We had a reversal alert on it this morning here as well. So there was your first one. There's your second one. So pretty much they're in the same spot. Just basically got an invalidation on that first one. M pattern going in potentially. Target to the downside. Target. Lots of targets. So it looks good for shorts. Pound New Zealand. Again, at the moment, New Zealand dollar is just really, really weak. So that's flying. So there's all your ADRs this morning. Or this afternoon even. Oh. Not banked anything on the ADRs. So those are the ADRs that I'm in at the moment. There's 5 of them. Nothing banked today at all on that front. RSIs, we'll have a look at the RSIs as well. Afternoon, Kenelly. Shorten, is ADR calculated based on current day's ADR or the ADR of the day we first entered the first trade? Nothing to do with trading. ADR is a measurement of the average daily range of an instrument. It's got nothing to do with trading. ADR is a calculation of the last, in my case, 10 days range. Yeah. So ADR is a calculation of that day there, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 to that day there. So it takes the average of those 10 days and creates a calculation, and then it measures from the low of today up that distance and the high of today down that distance, and that's what gives you ADR lines. It's got nothing to do with whether you're in a trade or not. It's just a measurement. What's your take on gold? Go to 9 minutes 30, Arjun, in the stream. You'll find out. Daniel, gold, sell. I think that's probably about right. Let's have a look. It's not anything at the minute. It's kind of sitting there doing nothing. So, don't know. Oh, what's going on with the Dow? The Nasdaq's coming down very nicely. Why is the Dow pushing? Annoying. Morning, Play Salty Games. Nice to see you too. Brian, Euro Aussie needs to make up its mind. Yep, John Wick has entered the building there officially. That's a lovely looking short. Oh. I'm on it already. Euro was already on it on this account. So in short, target back down to propulsion. In it, that looks good. So it's a really nice sweep of the highs look. Yeah, so that is last week's high, or that is last week's high. I mean, it's a double top last week's high, basically, on Thursday and Friday. Then yesterday, we didn't quite come up there, enticed everybody short. Everybody entered short. They came up, took everybody out from today and from last week, and now they'll run to the hills with it. Targets to the downside. We are going to need some Aussie strength, though, for that to actually happen. So it might be a tricky one to get into, that one. Afternoon, Chris. Right, let's have a look at RSIs. So Swiss yen, I just want to keep an eye on this. I haven't got my other monitor open at the moment. So it's just I've got a lot of leverage on this at the moment on Fiddle Crest. So I just want to monitor it. Just stopped out of another position on that. Have I just taken, sorry, one sec. 250, yeah. Oh, yeah, okay. I'm scaling out of this. I don't want to get too aggressive on it. I'm just making sure I'm keeping this average really tight because I want to make sure I get an out on it fairly easily. So I just want to keep an eye this afternoon. Right, RSIs. So let's cover the 4 hours first. Swiss yen. So Swiss yen, we've got this high, which we're approaching at the moment, which is within ADR today. So that's easy to achieve. Swiss franc's been pretty strong today. We've had quite a lot of movement this morning where everything's come down against the Swissy. At the moment, this is kind of stuck. So we've got, at the moment, if you look at this on the 4 hour, we've got an inside bar on an inside bar. Yeah. So if you look at that on a lower time frame, like M15, you'll find a symmetrical triangle formation. Yeah. So we're contracting, basically, ready for a breakout in one way or the other. All the targets at the moment are to the downside. So it would make more sense for them to break to the downside with this and come down and get some of these gaps sorted down here. And obviously run for the ADR. So that I would class as done. That I would class possibly as done. It's 150 ADR, so it'd be quite difficult to reach that today anyway. Got a little propulsion gap at 125. Got a little one just on beyond 100. We got that big one there, which was kind of the start of the move that broke. So that's where I would expect us to come down to Swiss yen as a short. It's extended on the 4 hour. So drop down onto M15, wait for a reversal alert. You haven't quite got it yet. There'll be your entry. You can take it on M5. If you take it M5, you've just had it there. You would have also had no, that was it. You might have had one there this morning. You might have had an entry there. If not, that would be it there. So, yeah, so there's your entry. Swiss yen short. Like it. 4 hour RSI extension up above 75. So it's a really nice extension on the 4 hour. Loads of targets to the downside. We've just filled these propulsion gaps to the upside. So we've got this really old one here, which has been tested, which we bumped into. That one is now done. That one is done. Targets are to the downside. We have got this little bit here. So there's one of two things is going to happen. It's either going to come down from here after we've just had that M5 reverse alert. If you take the M15 reverse alert, obviously, you haven't had an entry yet on that today. But pushing up into that propulsion gap takes out those highs, fills that gap, hits ADR, drop, extended even more on RSI. So that would be the ideal situation this morning to get or rather this afternoon, to get a 4 hour RSI extension above 80, which would involve us taking that liquidity, hitting ADR, and getting in short, and targeted would be down there. So that is really good, the Swiss yen. Pretty sure I've got that on. I'm focusing on these two accounts at the moment because I'm juggling them manually, and it's horrible juggling stuff manually. No, I haven't got a Swiss yen on. I've got loads of Swiss on there. I might take it on the other account. I've got no yen on there either, so I could take that on this one. 69. 70.49. Let's go short 0.5. I'm going to go on the 15-minute reversal alert because it's a 4 hour. So I'm going to get in on the reversal alert on M15, Swiss yen. Euro yen is extended on the 4 hour as well. That's a beautiful spot. Look at that. So we got this area here. Yeah, previous resistance level. We've butted up into this a few times in the past and rejected it. We've used it as support as well. Keep rejecting this level, and we're there again now. So we're either going to bust it or we're going to knock on the door again and reject. Target is down there, all the way down there. There's no upside targets apart from that really old bit, which has really been tested. So that looks like a good looking short from where we are now. Just pull back half an ADR or so to get out. Failing that, we've got another level there potentially, which is kind of this zone, if you like. And then we're back up into this area up here. So that is from where we are here, 220 pips, which is 1.5 ADR roughly. So 1.5 to 2 ADR. So if you were to get in here, and play the short and it didn't work, you'd be looking to take 1 or 2 positions somewhere up in that area and then get out. By the time it's got there, we'll be massively extended above the 80. Again, whenever we get up there, we have a big drop. So yeah, it looks good for a short. Drop down M15, reversal alert, or M5. M15 is somewhere around 145, 160. M5 is $145, 200. So it's 5 pips difference. Doesn't matter, does it? Whichever you take. So euro yen nicely extended to the upside. We've got the other two, which are 4-hour and hourly. So I'm going to quickly look at the Euro New Zealand, because Euro New Zealand is an ADR hit as well. And that is an hourly extension. So that's extended on the hourly. I've already got into this one. We had an M5 reversal alert there, which was a break there. And basically, as soon as it broke, it shot straight back up, invalidated that high. What's the sentiment on Euro New Zealand at the moment? They're all short. There you go. So 91% of the market is short Euro New Zealand at the moment. So that makes total sense. Yeah, we pushed down. We enticed all the shorts in. Everybody put their stops there. Bang, straight away they took it out. So all they've been doing all morning basically is entice shorts, put stops, take them out. Entice shorts, put stops, take them out. Entice shorts, stops, out. Shorts, stops, out. Shorts, stops, out. Rinse, repeat. Keep doing it until everyone goes, screw it, this is a long. Excellent. Put your stops down there, and then we'll do the reverse, and we'll just come back down again. So we're just waiting for retail basically to stop being idiots, as we are, and that will start to come down. So I like it as a short. Really nicely extended. Same trade as this. That exit that I took there. So there's the entry, there's the exit, half an ADR. So big, strong push, looking for that kind of move to get out. Yeah, hourly RSI extension. This is just lit up again. So we'll have a quick look at some of these others. So that's now 81. So we're above 80. So that's a really good spot to start looking to get in on that one. We've just had Euro CAD get extended on the hourly as well. It's kind of been extended and come back down again. So you've kind of missed the entry on that one. That was the ADR hit, wasn't it? So that was alerted on ADR. Aussie New Zealand we've looked at. Euro yen we've looked at. So the other two we've got are Pound New Zealand and New Zealand Swiss. And we've also got New Zealand CAD. Yes. Well, yes and no. No, because I took the opening range breakout to the upside, which I've just stopped out on and flipped short. But yes, because Feudal Crest I'm short on. So that's nice. So yeah, the other RSI extensions, we've got Pound New Zealand, extended on the hourly and the 4-hourly. Yeah, so we've got a 4-hourly extension above 70, big strong push up. I've got one short on that, looking for a second entry. Hourly, nice big extension, drop down to M15 or M5, get your entry there. There's your entry. We had an entry on it this morning. This was an ADR, we've already looked at this one, haven't we? So that was your entry on that high. So that high's entry would have been there. There. So that was entry one. That was your second entry. Yeah, this is the one that's really close. So yeah, looks good. Pound New Zealand for shorts. Really nicely extended on the hourly now. Look, all the way up there. Yeah, very nice big extension. Looking for that profit take move off of the back of that. Big profit take, profit take, profit take, profit take, profit take, profit take. Just wait. It'll come. New Zealand CAD, nicely extended to the downside on the hourly. This one's got some nice propulsion targets to the upside. So this one is just retesting this propulsion. That's being completed now. We've also got this level down here. So it makes sense on New Zealand CAD to really wait, if possible, for them to take this level out down here. Yeah. So this is your kind of low of the year, basically. This is January here. So this is the low of the year so far. So if we come back down and retest that, we're going to get some pending orders triggered. Some limits will be triggering down at those lows. So when we get down to there, which is ADR basically today, if we can get an ADR hit today, I think you get a nice bounce off of that, probably straight away back up into these gaps. That one's kind of done. That one's wide open. We're creating one here as well at the minute. So we're finishing these propulsion gaps off down here, then we'll bounce back up and do these ones up here. So looks good, nicely extended. You're going to get a 25 RSI alert on that in a second as well. Not in a second, in the next hour, if it continues to push down, and an ADR hit potentially. So lovely level coming up there, 83,400 roughly. New Zealand CAD for a long. That's on the 1 hour. It's not extended on the 4. New Zealand dollar Swiss is extended on the 4 and the 1 hour. So we are just taking out this low here. We're extended. We've got a nice propulsion target to the upside. We looked at this one this morning, didn't we? Looking for a pullback into the 24.72 zone to continue this move basically down. Yeah. So nicely extended at the moment. It is counter trend hourly. It's a breakout of this low, which we haven't done. Well, so this is kind of the lowest point we've had for a while. So I've got one long on it from here. It's too close for me to take a second, but we are extended below 25 on the hourly. So targets here. At the minute, that whole area there is a good target for a long. However, it might go down a bit further than that. So looking at it on the 4 hourly, if this level fails and we don't get a bounce back up from here at all, we're looking at coming all the way down to 175 ADR, which is 55,500, which is another drop of around about 70 pips, which is roughly an ADR. So we're looking for entry here and a bounce here to come up into that, or a continuation down there and take a second entry and then come back up into this. Either way, just wait for the bounce. It's really nicely extended on the 4 hour. Hourly, it's extended as well. Yeah, but look what we got last time. We got down here. Literally, we just got a flag break. Didn't get the pullback, didn't get the profit take move. So it's due a profit take move because all we got was a push, accumulation, push. May well do the same, push, in which case that'll be taking you down to that 4 hour level down here. And then we'll get the profit take move off the back of it. So it'll be like that. Yeah. So it'll either go from here or it will go from there. One or t'other. Dow. Oh. It's not my friend today, the Dow. We're just bouncing around in between propulsion at the minute. So we bounced out of that propulsion gap. Bounced out of that propulsion gap. We're now hopefully going to bounce out of this propulsion gap and come back down and retest that low and get that finished. So that's what I'm looking for today, is a push back down. However, certainly looks like at the moment it wants to go long. NASDAQ doesn't look like it does it? Neither does the S&P. Tricky one today. Not really got any direction, has it? Certainly wants to be short on the NASDAQ. If you took the NASDAQ opening range break, you're doing okay. The Dow's just a bit of a mess today. Oh my God. It's just taking the 5 minute high out again. That's a double-ended stop out today. Mess. It really is. It's one of those things. It's the most frustrating strategy in the world, opening range breakout, because it doesn't seem to matter which instrument you pick. If you pick the Dow, it's the NASDAQ that does it. If you pick the NASDAQ, it's the Dow that does it. So if you pick both of them, you get one win, one lose. Every now and again, you'll get two winners on both of them, and that's the day that you just clear up and stop trading. But this thing is just driving me nuts at the moment, the indices. I think the problem with the indices at the moment is they don't know which way they're going, do they? Look. It's like we made that high, and what we seem to do is we have a 3-day or 4-day run, and then we haven't got a clue what we're doing. Yeah. It's just like that at the moment. It's just, there's no like nice market structure to it. It can't work out if it's a bull market or a bear market. Anywho, Arjun, gold is pushing up, is it? Let's have a look. It is. Well, it's been pushing up for 15 minutes. Just accumulating at the moment in rotation. Caravoca è legal. Ex-cap trend. I have no idea what that means. Caravose è legal. I don't know what that means. You have to translate that one for me. Hamza, Aussie New Zealand hit ADR. And that was this morning. So depending on your broker and what your broker did, let's look at the Aussie New Zealand on Fidelcrest and see what the difference is. So that 15-minute candle on Robo was 40 pips today. On Fidelcrest today, that candle was 30 pips. Difference the broker makes. So yeah, very different result on Robo and Fidelcrest today, depending on who your broker is. But yeah, it's definitely an ADR hit now, isn't it? I mean, even if it was, even if you're not counting it as a 125 ADR hit, it's an ADR hit. So looks good for a short. I think I've got that on already, actually. Aussie New Zealand. One of these accounts, is, I'm pretty sure, has got an Aussie New Zealand short on it. No. Can't take it on that. Can't really take it on that. I would hedge myself. Oh, oil, what are you doing? Oil doesn't look like it's going for the lows for the breakout yet. So oil, we need to just watch this range, basically. So where's my drawing tool gone? What's it doing over there? So that high there on oil, pretty much that. So this area basically, which is ADR today, I would expect to see some rejection in. I will probably take a third there, and then I'll stop the whole lot out if we break out of that tomorrow. If we get up there, obviously. We'll see what happens. Lee, what did you get into over the weekend? Hopefully it was a good one. What did I get into over the weekend? I don't know. Nothing, sir. Wasn't me. What did I get into over the weekend? Diamond, I managed to get half an ADR from the Dow this afternoon, 0.5% from the Dow, just going for small dailies. Good. That's what you should be doing. Half of me wants this to collapse. So market structure at the moment, obviously there's your opening range. So all we've done is put in a high, lower low. Now we've got a lower high potentially going in. So at the moment we're in kind of an expanding wedge, which is no good for anybody. But market structure potentially is high, low, lower high, lower low. So we'll see. We need to get that low broken. So at the minute we're just trading on an inside bar. So if we can get that low taken out, that'll run us down to there, and we'll see if we get any buyers stepping in down at the lows, but we'll see. Tamo, you're late. I made 3K thanks to your ADR strategy. Good job. Can't believe my content is free. Neither can I. My wife keeps saying I should actually set up a course and charge for the live rooms. You do it all for free. I know. What do I do this weekend in American? What did you do this weekend in American? What did I do this weekend? Is that what you meant? Do you want an American accent? I don't know what you mean. I'm not in America. In American talk, that's another way of asking if you do anything over the weekend, having fun. Oh, right. What did I get into this weekend? I see. Easter eggs, mainly. Easter eggs and wine. That's pretty much what I got into over the weekend. And now I need to get into the gym. Big style. I went spinning yesterday, and my shorts were really tight. It's not good. It's not good. Right, so if anybody's got any other pairs they want to look at, let me know. Otherwise, that's everything covered there. So at the minute, we're just kind of waiting for stuff. Everything's moving fairly nicely, or it's flat as a pancake. So it's a bit of a mixed bag today. We've got a lot of movement, but not a lot of direction. So I think what we're looking at today, because it's a no news day, we're probably going to see a lot of large whipsawing, basically because we're waiting for all this news. So tomorrow is the rate announcement for the Canadian dollar, and we've got the inflation figures for the US. So one before market, one after market. So I would watch the open tomorrow. Having said that, I've said this before, we've got big news coming 30 minutes after the open tomorrow, and we were thinking we better not do that. And then all of a sudden, bang, we got a massive move, didn't we? So difficult to tell, but we've got lots and lots of news tomorrow, and obviously FOMC tomorrow evening. So could be a big one tomorrow, but today so far, we literally seem to be just pushing and pulling around and not really going anywhere, do we? So especially with the Dow. So the Dow's just done an inside bar. So looking for this high to hold. See if we can get that low broken, and start to head our way on down there. If we do, we've got a good chance of testing the lows, I think. Pre-market lows in Globex were there, which is 33,560 on the Dow. What's that Nasdaq up to now? Nasdaq still pushing short. Oh, typical. I didn't take it. I took the Dow. So there's your 5-minute opening range on the Nasdaq. Nice break. Your 1-to-1 straight break as well. But we're running into this area here, which we're going to find potentially some buyers after breaking out that high on Friday. However, I probably wouldn't pay, yesterday, Monday, I wouldn't pay too much attention to yesterday's price action because it's obviously only America. So, Brian got into Telegram. Yeah, I was in Telegram. Samuel Talley, Nasdaq and gold update in Telegram. Go on then, update us. I don't know if he's asking for an update. And if so, how do you give an update on something you're not trading? Some very confusing people around. Highs are holding on the Dow. Got 2.5 minutes left on this candle. Let's see if we can hold those highs. Nasdaq is certainly coming down hard. So the other indices are coming down very nicely, which hopefully will hold the Dow in place. And then the Dow will just basically give up the ghost and collapse. And then we'll get more push on that, and the whole thing comes down today. We're getting close to ADR as well on the Nasdaq. US dollar CAD, Mandy. I'll have a look at that. Don't forget to hit thumbs up, guys. We've got 86 people in here. We haven't got 86 thumbs. US dollar CAD. Hello. Okay, so we've got weak US dollar at the New York Open by the looks of things. Very weak yen. So US dollar CAD, I've got three positions on this one at the minute. Have been stuck in it for days, basically. When I got in here, we were very well extended on this big, strong push, expecting some kind of bounce at the lows, didn't get it. So taken 2 extra positions on this, just waiting for some movement. I had an out on it on yesterday, but yeah, not really going anywhere at the moment. Propulsion gap target is there. So basically looking for this area here that forms the breakout to get retested. And we got this area here as well, which has already been retested twice for a third test. But right now it's just kind of sitting in the middle of nowhere, so it's not really tradable at the minute. But I'm in long already. A 4-hour extension entry was somewhere in here, so a little bit on the 4-hour you'd have got in a little bit later, but you'd still be in it with a good couple of positions. You had an out there as well, same as I did, but didn't get it. Didn't get quite enough movement out of it. 30 seconds left on this candle. The Dow's holding the high. It's also holding the low. So we've now got an inside bar on an inside bar on an inside bar. Struggling. Certainly can't make any new highs, can it? So bearish. However, bearish US dollar is bullish index. So we'll see if this US dollar can turn itself around as well. It seems to be coming off the bounce now at the moment. So we'll see. Derej, I love your sentiment table. Where can I get it from? The website. There's links. Look. On the bottom. Hang on, it's not coming. Not the bootcamp link. That's to train you how to trade for free. It's not that one. Indicators, it's not that one. That one tells you all about the indicators I use. But just watch the bottom of the screen. There's a link to the fundamentals. It's basically mst.info/fundamentals. And that will take you to the website. I'll tell you what, I'll just put a link in here, shall I? It's much easier, isn't it? Just to put a link in. I don't know why I don't do this. There you go. There's a link to your fundamentals section. It's much easier. Okay, we just tested those highs and rejected. So the sellers are basically selling really hard at this level. Buyers are not able to get through this area here. Look, every time we tapped into this is the Globex high. Every time we tapped into the Globex high, we've rejected it. Yeah, so it looks good for shorts. See if it holds. Just thumped it. Good one. Thumb it. Hit the thumbs up. James slacking on the like. That's okay. Weak US dollar. How unusual. I know. I think this US dollar, I'm just waiting for a collapse on the US. Really am. The Fed basically are grabbing on with both hands to this beautiful bullishness in this time of absolute crisis. But there is only so many times they can promise us another interest rate rise. As soon as that comes out at a zero, I think the US dollar is going to go like that. We see it in the news, don't we? Every piece of bullish news we get. Yeah, so if we get positive CPI tomorrow, we'll get a little bit of bullishness. If we get decent CAD stuff, we'll get a little bit of bullishness. If there's one figure comes out as a negative, bang, it collapses. It drops twice as fast and twice as hard as any positive news event. We've also had positive news events dropping it as well. So it's getting to the point where, you know, it's like an engine spluttering in the sky, and there's only so much time before you're going to glide back down again and crash. So just waiting for that US dollar to falter. At the minute, though, it's holding up. What I'm looking for as guidance is index bullishness, and that's what we're lacking at the minute. So I'm waiting for these indices to really get going, but they're not. Until we get some, you know, we're not able to break any high without a really big drop. You know, we take a massive run up, crashed again, just about get through the high, stall. Yeah, there's none of this back into a bull market. And as soon as we get back into a bull market, the US dollar will come down nicely. But the indices are also coughing and spluttering. Look at the Dow. Yeah. We're making new lower highs potentially and lower lows on the Dow. This thing's starting to roll back over, which would indicate more strength in the US. So it's a very, very difficult thing to read at the minute. Everything is, it's all being driven by interest rates, and interest rates are all over the place. Well, they're not. We know they're all going up. But David, euro odd and pound odd, long in both. Well, you should be out of that euro odd. If you're long in it, you should be out of it, shouldn't you? If you got into it, you either got into it there, in which case you're way out. You wouldn't be in it from there. I'm out of that. I've been in short twice since then. In, out. How much do you want? Half an ADR. That's 112. Half an ADR is 73. 112 is getting on for an ADR movement to the upside today. So if you're in it, you should be out of it. Pound odd. Pretty much the same story. There's a lot more downside targets on this, so I'd be wary. If you got into that one yesterday as well and you're not out of it, there's potential for this to drop. It could well just go, obviously. We don't know. This Australian dollar's not strong at all at the minute, but right now it's not, you know, I wouldn't be long in any of this. It's flat. It's been sideways for 3 days. You've had absolutely no reason to get into this since last Thursday, and that would have been a short. Unless, of course, you're hedging. If you're using the hedging set file on H1, obviously you're in long, which is fine. Just wait and wait for it to get you out with whatever target. Euro odd, I've got a long and a short. I'm hedged on that account, euro odd. So euro odd, we've got a long on here and a short from there as well, because we went sideways. This is the thing with the hedging set files. When you go into an accumulation, you get reversal alerts in both directions very, very quickly, because when you go into an accumulation, the indicator will start to draw structure within that accumulation. Yeah. So we got a long and a short within like 30 pips, which is a quarter of an ADR. So wait for one to play out. When one plays out, the other one just get dealt with, whichever way it goes. Doesn't matter. One way or the other. Dow's just broken to the upside. Nasdaq's pulling back. So this propulsion break there from Friday, from Monday, from yesterday. But yesterday? Market was open yesterday, wasn't it? Yeah, 10th. So buyers are buying this back up again, look. So we're looking for a push up into there and push down. So propulsion gap basically here to push back down again. Dow, however, is obviously making new highs. I really don't want to be long on this at all. Damn. I'm just going to stop this trade. Basically, I've got a long opening range breakout on. I don't like the look of this up here. just because of the distance that's moved and what we've done here. I don't like the price action on this. It just doesn't look long, does it? Look at all these wicks to the upside. There's a lot more selling pressure than there is buying pressure at the moment. We couldn't get out the lows. We haven't managed to get out the highs, so we're just accumulating. I don't really think we're going to get much of a break today, so I'm just going to break even this because I don't like the look of it. There we go. Yellen want to raise our debt ceiling to 50 trillion. Unfortunately, this is room to start a war to get some money. Don't know. Quite possibly. The fundamentals at the minute are not, for the US dollar, they are not going to sustain anything more than 5.25. As it stands right now, inflation is coming down. Unemployment is coming down. Yeah. GDP is coming down, but that's to be expected. But look at the GDP compared to the rest of the world, 2.6. So yes, it's coming down, but it's just coming down in line with everybody else. When we get this May 5.25, if we get it, that is it. I can't see them going any higher than that, which means we're going to falter. What they do from there will be interesting, because if they start to drop interest rates as the rest of the world continues to put them up, it's really going to hammer the US dollar. I reckon they're probably going to stay at 5 to 5.25 for the rest of this year. What they do with everything else, I don't know. But at the minute, all the fundamentals are starting to go the right way for the US dollar, which will take the pressure off. So be interesting. I'm not quite sure. When we get the Canadian tomorrow, that will give us a bit of a gauge, I think, as to what the US will do. I get the feeling we are just going to get the 4.5 tomorrow. Mind you, we had that feeling last week, didn't we, with New Zealand, and they didn't. They went up by another 2.5. So I don't think the Canadians will want to catch up with the US. They're doing okay. So and they've got obviously oil to back them up. Mind you, so is the US, but it'd be interesting to see what happens to CPI. So if CPI drops tomorrow, that will mean we'll get a little bit of a weakness in the US dollar, which will also take the pressure off inflation raise in May, which may also weaken the US dollar even further. So if we get negative CPI figures tomorrow, I think we might get a big drop on the US. We will see. But we don't know what's going to happen tomorrow. So at the moment, the market's not really doing a lot today. As you can see, in London, we've done that. So there's not a massive amount of movement on the US today. If you look at the euro US dollar, that's pushed in London, but only to there. Yeah, we've had half an ADR move, 40 pips or so, 37. So yeah, don't know. Will be interesting tomorrow. We will see what happens. It's going to go one way or the other. David, the H1 mean reversion, don't you have it set up where TP is 1 ADR and the fake stop loss is half an ADR? Where am I? No, TP is half an ADR. And spacing is half an ADR. That's why I've got mine set up anyway. So half an ADR apart. I would never target an ADR on anything. ADRs, I mean, I would target an ADR, it'd be lovely, but you know, look realistically, you're going to struggle to get an ADR movement out of anything unless you're going to hold it for multiple days. I'm much more about in and out and building the bank. Yeah. So I want this thing constantly getting bigger and bigger and bigger so that we can use it when we get into trouble on stuff. So I want to bank often. If you leave everything to an ADR target, you've got to move a long way, which means, don't forget 58% of the time the market stays within its average daily range. So 58% of your days, i.e. potentially 3 out of 5 days, you're not going to get an ADR. So if you don't get an ADR in movement, you're not going to hit a target. Half an ADR, you will hit virtually every day. Go and look at an hourly chart and measure half an ADR, which in this case is 39 pips. Yeah, 120, 56, 56, 54, 100, 86. That was a big one. 126. Yeah, half an ADR is 39. We haven't had a day where we haven't done 39 pips. 80. The smallest day, which is this one here, we still did 49 pips on a 39 ADR as a half an ADR. This is what I mean. Look at this trade here on the euro US dollar. In, out, half an ADR. Yes, I could have had an ADR out of it, but what if it had done that and collapsed down there? I'd rather have that in the bank 10 times a day than be sitting here waiting for 4, 5, 6, 7 days for the thing to actually move an ADR to get me out of a position. Regardless of what strategy I'm trading, obviously you're going to make more money, but you're going to have to be more patient, and you're going to get more drawdown, much more drawdown. This is the whole point of ADR, is it tells you how far something is likely to move in a daily rate on a daily basis. If your targets are always outside of that range, you're always going to find it hard to hit it. And that's the whole argument with risk reward ratios. Yeah. So, this is a good example actually on this Euro CAD. There's an entry there, for example, and your stop loss would go underneath the low. So if you wanted a decent risk reward ratio of say 4 to 1, you're going to have to go like 1, 2, 3, 4. This thing's got to move 125 ADR to get that. Yeah, it could easily go for a week or two without ever hitting ADR. So you could get in with it beautifully, but the chances of you getting out are very little. The chances of you getting half an ADR, virtually every single day, you're going to get half an ADR. Well, I've just proved it, haven't I? You do get half an ADR of movement every day. To stay within its average daily range and actually move, it's got to do half an ADR just to go up and down, isn't it? So, but, there is no right or wrong. It's personal preference. I miss loads. I miss loads of profit. But then I'm not looking to make loads of profit. I'm looking to make consistent profit difference. But they will both work. Look at everything will get you a target if you leave it long enough. If you got in short here and short there and short there and short there, and you said I want an ADR out of it, your average is there, you'd have got it. But it would have taken you from there 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days to get it. You still got it. However, what I would rather do is be in this morning and out this afternoon. In this morning, out this afternoon. Rather than having to wait 10 days to get in and out. And that's something I've noticed as well. With some of these prop firms now have a consistency target where you've got to trade a minimum of 7 days, but the 7 days have got to include an entry and an exit. So if you swing trade and you get in on a Monday and you get out 2 weeks later on a Monday, that's only one. So it's in, out, in, out. It's kind of a scalping. It's a kind of a scalping hybrid target, if you like, isn't it? Always achievable. And obviously, when you've got multiple positions on, like on the CAD yen, yeah, there's my average here, which from where price is right now, my average is 103 pips away. ADR is 100. So all I need is for this to do that today. Tomorrow, that's easily within half an ADR, isn't it? So easy to get out. Ease of use rather than multi-millions. Afternoon, Steve. Diamond, the debt ceiling isn't about getting more money for stuff. It's about paying the bills on spending that's already appropriated. It's paying the credit card bill. That's way deeper into economics than I like to delve. If you follow what COT do, you kind of don't need to know most of it. Yeah, if they're long on the US dollar at the moment, it's because they're expecting the US dollar to go up. When that starts to shift dramatically in the other direction, usually you find the currency moves before COT. So you will find the US dollar will start to come down, and then all of a sudden you'll see COT start to go short on it, but it will have already happened. So, you know, we're always lagging with COT data, but, you know, you're going to get stung every now and again. And if you're not going to be quick and keep your finger on the economic pulse, then you can use COT. Dow's, I'm glad I stopped out of that. Dow's just schizophrenic at the moment. We've got a gap, look, on the Dow. Is that on the, is that real price action? Yeah, it is as well, look. That's a big sell order just came in on the Dow. Oil. Where should I put that? If we hit ADR today, I'm going to take a third on it. Silly old oil. Mumo, would it be correct to say the hedge set file does better in ranging pairs? Also from the sentiment meter, how does one interpret ranginess of a pair? Afternoon, Huang. Afternoon, Shalk. So the hedging set file, this one, will basically trade, all it does is it literally trades H1 reversals. So when there is a reversal on the hourly chart, it will get you in. That's literally all it's doing. So yeah, obviously if something is ranging, then yeah, you're going to do a lot better. But things that are ranging don't range like that. They range also like that. And they range like that. Up in big ranges where you'll move all over the place. So the idea behind this set file is to consistently get you in and out when the market is playing ball. Like that. But if you go into a strong trend, it will scale you out of those ones that you're in the wrong direction on, and you'll make money in the opposite direction as it comes back down. Yeah. So with anything you get into with the buyer scorecard, these will probably be your better options, the ones which are range bound here. So anything that is in that zone is fair game, basically. But anything that's in this zone can shift like that on a fundamental decision. So, for example, pound CAD is currently range bound. If tomorrow the Canadians come out and say, actually, we're not going to stick with 4.5, we're going to go up to 5.25. Haha, fooled you. The Canadian dollar is going to go through the roof. Pound CAD is going to drop like a rock. And you're going to be the wrong side of it. And there's nothing you can do about it. So you will have to scale out of that position. So it doesn't matter if you're range bound. At some point, you're going to get caught offside on some of these things. Yeah. So you have to just go with kind of what you want to use with that hedging set file. And it's not so much a hedging set file, I guess. It's probably the wrong terminology for it. It's just a reversal set file, but it will trade in both directions, obviously at the same time, if things haven't moved half an ADR. So when you go into a tight contraction, you'll get into positions in both directions, as we saw with the Euro odd. Yeah. So we're going to a tight range. Yeah. So let's have a look at one. So let's pick something that's Aussie dollar, New Zealand dollar, the most range bound thing we've possibly got at the moment. Yeah. So let's look at that as an example. Yeah. If you give this to most people, they say it's not range bound. Right. But it is range bound. But then it goes into price discovery and it comes back again. Yeah. It was range bound there. But look at the range. Some would call it an upward channel. Then we had a big, strong push on fundamentals. And then it went back to range bound. But what this buyer scorecard is saying is there is no fundamental reason we will get a sustained push in one direction or the other, because there is no fundamental reason the Aussie should be way stronger than the New Zealand or the New Zealand way stronger than the Aussie. So what we're likely to find in a range is we'll go like that for a week, muck about, push up, down, muck about, go down for a week or two to somewhere around where we were previously, then push up, sit around here for a bit, then maybe push into the middle for a bit. But this range could be 6 ADR. But what we're saying is we're not going to go into a sustained 10, 12 ADR push in one direction, which is what we call a squeeze. Yeah. So that's what the reading kind of is. That's a squeeze. At the time that happened, we were minus 12. Yeah. That's not range bound. That's a strong trend, because the Aussie dollar's fundamentals were way worse than the New Zealand dollars. When we started mucking about with interest rates in September last year, the Aussies really screwed it. The New Zealanders got on board fast. Bang, it slammed. So what we're saying at the moment is you're going to get a lot of choppiness. But direction, you can still be choppy in a trend. Yeah, so that's kind of how you need to read the buyer scorecard. It's not telling you that this thing's going to go sideways like that. It's telling you that there's no reason why either of these should move fast and hard in one direction. However, the US dollar CAD, it's telling you at the moment, the fundamentals are saying the US dollar should be stronger than the Canadian dollar at the moment. All of the market participants in the futures arena are all long. And at the moment, we've got retail who are currently long. So we want to be shorting it. But if retail flips short, we want to be going long. That becomes a plus 10. So with something like that, I would probably say we just want to be looking at longs, because there is potential for that to go into a strong trend. However, and again, this is where, you know, in trading, you cannot just have a signal, a strategy, or anything that is simple as this does this, that does the other. Right now, this is saying this because the interest rates are so strong on the US dollar. Unemployment's coming down. GDP is higher than everybody else. Inflation is coming down. This is why this is such a strong buy at the moment. However, this thing cannot take into account the fact that we are possibly getting to 5.25 terminal rate on the US dollar, and the thing's about to go down because it's got nowhere further up to go. Can't tell that from this. So you've also got to have your finger on the fundamental pulse of what's going on with these things and looking at where we're potentially going in the future. Yeah. So you can only use it from that respect. With sentiment, retail sentiment, this is short term. So what we're saying here is Euro New Zealand, at the moment, 91% of market participants are shorting this, which means that if the market needs to grab liquidity, it's going to find it up the upside, not the downside. So Euro New Zealand, if you look at the fundamentals on it, are saying that we want to be buying this. Yeah, at the moment, COT are all shorting it, right? So if the big market participants are saying they're buying it, all the fundamentals are saying you should be buying it, and all of retail are shorting it, meaning their liquidity is up at the high. What do you want to do? Buy it. Yeah. So Euro New Zealand will be going up because everything fundamental and everything from a retail perspective says that's what should be happening. Does it mean you can't short it? No. Of course you can. Yeah. Everything that pushes hard has to pull back. But if you wanted to shoot me in the head and put a gun to my head and say, right, Euro New Zealand, in 4 weeks, if you haven't got the direction right on this, we're going to shoot you, I would not do anything but long it. Because the fundamentals, COT and retail are all telling me to do that. However, look at it on a higher time frame. Yeah. What's that? A tight upward channel, range. Look at it. It's ranging, but with direction. Everybody thinks a range is that. Highs, and it bounces from highs and lows. It's not. Range bound means there's no directional bias in any strength that's going to move it strong in one direction or the other. It means it can go up and it can go down with with ease, relative ease. One news event on the euro that's negative, it will come flying down. One news event on the New Zealand that's positive, it will come flying down. One New Zealand negative, it will go flying up. Same with the euro. Yeah. But if we get one strong euro news positive and then following day we get a negative New Zealand news event, we're going to get a double strong push. Bang, we're going to get a big push to the upside. But as soon as that news event is over and everyone's calmed down, we'll do that. What it's saying, all of this is saying is, don't go short something that's a plus 12, because it's more likely it's going to go through the roof. But anything that's sort of in the middle-ish, doesn't matter which way you trade it. And, sentiment as well, with the retail sentiment, we're looking at Euro New Zealand because that one, the market is shorting it. All that's saying is, if the market needs liquidity, and it doesn't always need it, if it needs it, it knows where it is. It's up at the highs, because everybody in retail is short, and everybody in retail isn't necessarily just you and me sitting at home. There's a lot of retail traders that are small companies that are trading with retail brokers. It's just retail broker data. We call it retail, but it's anybody that trades with a broker, a retail broker, basically. If they're all hitting the short button and going short, we know where the liquidity is. So the liquidity will just keep rising. Price will keep rising all the time. It needs liquidity, and the market is hitting the short button because it's placing orders in the market at the highs in the form of a stop. When we go short, we use a stop loss. What we're doing is we're putting a market order there to say, when you get there, take me out and make me lose money. So the market goes, all right, thank you very much, I will. Which is why if you don't use a stop loss, all that will happen is you'll just wait for the market to come back down in your direction and you'll put the money in the bank. So we need tools which give us that information. And then we need a system to trade in line with that bias. But you can also just use the moving averages, which is the easy way. Use the 24 and the 72. That's your monthly and your quarterly moving averages on the daily time frame. If it's been going up for the last month and quarter, it's probably going to continue to do that. Why has it been going up? Because the fundamentals are positive, cot positioning is positive. So the moving averages are going to tell you basically pretty much what this thing says. Because the reason this thing says that is because the market is manufactured at the moment from a fundamental and from a futures positioning perspective to go long. So therefore, it will go up. Therefore, your moving averages will be telling you to go up because they're green. If you find something that's short, like the New Zealand dollar, US dollar, you'll find the moving averages will be red. Because fundamentally, it's being driven down by futures market and fundamentals, meaning the big market participants want to be going that way, not that way. Yeah. So it's all these tools for directional bias are great if you want to trend trade or you want to try and avoid a squeeze. But at the end of the day, none of this means anything if there is an earthquake in New Zealand. Yeah, the New Zealand dollar will come down, regardless if they've got the best fundamentals in the world right now and everybody wants to put their money there because their interest rates are amazing. If they have a huge earthquake, all their power goes off and there's a tsunami, the New Zealand dollar is coming down. None of this means crap. If there's a fundamental shift or a world event, this is going to mean absolutely nothing. So this is what the H1 hedging set file will do, is it will just keep getting you in constantly and hope that we spend 80% of our time, as we always do, in some kind of mean reversion state, whether it be completely sideways, whether it be an upward channel or a downward channel. These are all mean reversion states. This is a mean reversion hedging set file for the market reverse alerts EA. So it's designed to get in when there is a shift in structure. Whether that holds or not, there's nothing on the planet that's going to tell you that, is there? We don't know that. But what it does is it's set up so that when it moves in a direction, if it's right, it banks. If it's wrong, it scales out of some of that position, it gets in again and waits for the next shift, because it's not going to do that. So therefore, it's probably going to do that. So we take a little bit of a loss, we get in again, and we get down to there. And we've got to try and hope that we don't get a massive drawdown while we're doing it, which is why you need to keep your eyes on exposure. There is no right or wrong. There is no, like I said, there's no holy grail. There's no way of predicting the future. If there was, obviously everybody would do it. And we're not. We can't. We don't know how to predict the future. If I knew oil was going to go up today, do you think I would have hit the sell button? I wouldn't have got into the DAX short, the Dow short, if I thought it was going to go up. You know, it's just, there's nothing you can do. So what you have to do is get in, manage your risk, and get out when you get an opportunity to. And if you don't get an opportunity to, and you're unlucky enough to get squeezed to hell, you're going to take a loss. But the whole premise of the bootcamp is we don't know when we can get in, when's the best time to get in. We can't time the entries. We can't time the exits. We know that price moves within a certain distance within a period of time. So therefore, if we target something within that period of time, we've got a high probability of getting out. But the entries, no idea. If the banks don't know that. Yeah, the banks are executing orders. The institutions are executing orders. The pension funds, they're getting in to a position. They will go into drawdown up to 15% of their portfolios, waiting for those waves in the market, which they know are coming to come. This is why we call it a short squeeze. When you get squeezed, when you're short on something and it keeps going up, it's a short squeeze. Yeah. The reason they call it a short squeeze is because basically everybody that's shorting and shorting and shorting and shorting in the institutions, at some point, they're going to have to start to scale out of those positions, which powers up the buyers. The buyers then buy more, which squeezes them further. Where they pile out of a bit more buyer fuel, it pushes harder. And that's nothing you can do about that. When it's coming is not down to you, me, or anybody. It's down to the market. You can't predict it. So every strategy you use without a stop loss has that risk of you getting squeezed. And when you get squeezed, it's going to hurt. The H1 hedging set file, I would say, is probably the one that is going to be the most prone to drawdown, because there's absolutely no technical skill involved in it. Basically, if price pushes up and then it pushes down by a certain distance, it goes short. That's it. Yeah, it's as random as you can possibly get. You could flip a coin and hedge just in exactly the same way as this is doing it. At least with the other set files, the mean reversion set files on H4 and H1 and ADR, we know we've had a strong push before we get in. So the chances of that mean reversion happening are higher, which is why I use them. The hedging set file, as I say, is just being tested, forward tested at the moment, because the back testing results were good. But I'm keen to see what happens with this, because the drawdown on it could be absolutely horrendous, couldn't it? In back testing, this has had easily 15 to 20% drawdowns on one instrument. You get 5 of them pushing at the same time. That's 100% drawdown. That's an account blown, isn't it? So, you know, we need to see what happens. And as I say, at the moment, we're sitting in this nice, super, super rangy world. And we have been for months, and it's lovely. But at some point, one of those currencies is going to go pop. And as soon as that currency goes pop, it tends to be the leading currency before lots of other things start to go pop. And it tends to be the US. The US is always the first to get into trouble. The US is always the first to strengthen up because it's the world currency. Everybody in the world uses the US. So when it gets bad, it gets really bad, really fast, which is why I'm teetering at the moment, waiting for this, waiting for the Fed. And this could happen on Wednesday with FOMC tomorrow, couldn't it? I'm waiting for the Fed to say, unequivocally, 5.25 or 5 is our terminal rate. We've just had the interest rate inflation figures out this morning. Inflation is down for the second month running, or the third month running, or however many months it is. Therefore, we see no future interest rate rises required. Boom. We're waiting for them to say it. But all the time they need a strong US dollar, they're not going to come out and say it. And at some point, the markets are just going to go, nah. we don't believe you, and they're going to do it for them, and they're going to drive it down for them. No idea when it's going to happen, but it's coming. And at that point, the stock markets are going to start to rally. And that is the point we go back to the good old days before COVID. Well, not before COVID, the good old days when we're in a bull market. Yeah, we just go back to trading is just too easy. Bull calm, off we go. Forex markets will get hugely volatile. ADRs will start to spike. Movement becomes fast, and we just make loads of money. At the minute, it's a nightmare. It's just impossible to predict anything. And you can see this is why we go into these bear markets. As soon as we go into a bear volatile market, you know, there's no one on the planet that can predict anything. It's just a crazy thing, and it's just unpredictable and uncontrollable. And these types of markets are when hedging tends to work really, really well, because it's non-directional, it's random. So, you know, flip a coin, do the John Wick. Yeah, it doesn't matter which one you pick. I can't really find. Yeah, doesn't matter which way you go at the moment. Yeah, as long as this market stays in a mean reversion state, which it's in, like that, and market structure is just pretty, we'll be fine. But at some point soon, there's a storm coming. And it's quite possibly going to be something to do with Ukraine, or it's going to be another banking crisis, or we've got lots of talk of housing markets at the moment. Housing prices have started to go down. I think it's 3 months on a trot in the UK now. We're starting to roll over. You know, and always look at it like an oscillator. Everything that's going really well hits a point where it all starts to go to crap. Yeah. Housing market has been doing that for years. Banking sector has been doing really well for years. Interest rates have been going up for ages. Yeah, everything is coming to an end at some point. We just don't know what that timing is going to be. So you just have to be prepared, which is why I say, you know, watch your exposure. Yeah, because when the thing that is going to go crazy happens to be the Swiss franc and it goes long for 3 weeks, that's going to be hard work. So you're going to want to be out of that fast. But right now, it all looks rosy, doesn't it? So just be careful with your exposure. Don't get overexposed too much. Oh, damn. This thing's killing me today. Nasdaq's dropping. Still. And the Dow is just not able to do anything. Look. So we're retesting high of the session, basically, high of the day. Again. Nasdaq's still coming down. What do you do? Afternoon wealth tour link. HR. I don't know what that means. Hamza, my point is trouble at home, start a war somewhere else and bring the resources home. History repeats itself. Yeah. China's worrying at the moment. China have just been doing military drills at Taiwan, basically, and they've done simulations to fire everything at Taiwan at once, and they've cut off the Taiwan Strait and all sorts of things. So this is what I mean. The most likely crash that we're going to see is going to be non-financial related. The next one is going to be more like world event related, I think. Housing markets tend to be controllable. Banks get bailed out. All sorts of things happen. When China suddenly goes, we've had enough, we're coming and getting you Taiwan, US has to get involved. Everybody gets involved. At that point, Russia goes, right, let's take the rest of Ukraine. All of a sudden, that's when the markets go mental. And there's nothing you can do about that. So, milk it while you can. Build yourself a bunker. Why do you have red horns behind you? Because my chair is made by a company called Diablo. Simple as that. It's not because of any trading related thing, although it does look quite good, doesn't it? I look like a bull. But it's just because my chair's made by a company called Diablo. There you go. I'm not promoting Diablo. They don't pay me. It's just that that's the chair I got. And the only reason I got it was because it had bullhorns on it. Call me a trading geek, but that is it. That is why I bought it. Muto masa as analia. Sorry, I can't understand the word you're saying. Why for you to market go next? Still don't know what you mean. Brian, on the ORB, would it be advantageous to have a 1-to-1 on both sides? Take half off when hit and let price run in either direction? Yeah. If you can get it. So if we look at today, so the opening range today was here. Look, that's your opening range. One low. Sorry, opening range two low. So there's your 5-minute opening range today. There. So if I put a fib from the other way around as well. Okay, so there's your opening range today. So I've only got 1.5 hour on the fib. Let's put a 1 hour on there as well, shall we? It's annoying. Okay. So there's your 1 hour on today for the ORB long, and there's your 1 hour today for the ORB short. You ain't got anywhere near it. So like every set file for the opening range breakout EA, you will have days where that's amazingly profitable. You'll have days where, like today, you're not going to get there. So you would have been stopped out today 3 times on that. And you'd possibly be short and stopped out again long now. So it's terrible today. You can't do anything. This is a rotation day. You can't trade an opening range breakout or trend strategy, which is what the ORB strategy is, in a range. It doesn't work. This is one of the days it just doesn't work. But yeah, you could do that. Go for 1 hour. But, you know, you can see today, you got nowhere near it. You got half an hour upside, and that's it. So test it. Get the opening range breakout in the strategy tester and test it. You will get a set file that's profitable doing that. Although, because it's a 1 hour, you might not. Days like this, I think you'll find if you made sure in the ORB set file you had it set to false for continuous mode. So if you had continuous mode set to false for the opening range break, and you just took 1 long and 1 short, and that's it, with a 1 hour return, what you'll find is you'll get obviously 1 win, 1 loss if you get a false breakout and then a run, which is a break-even day. If you were going to take 2 breakouts, so you take 1 and 2 being the same, one of them is a 1 hour and the other one is a runner, then you would probably make money with that strategy. But again, like every trend and breakout strategy, they are frustrating as hell because the strike rate is 30%. 80% of the time, we spend ourselves in mean reversion, which is why I'm a mean reversion trader, because I get 80% of the opportunities. 20 to 30% of the opportunities are breakout and trend. So anybody that's just purely a breakout and trend trader is missing the vast majority of all trading opportunities out there, which is why you don't become a trend trader. This is a trend breakout strategy. So it has a high success rate on breakouts, on trends, on trend days, which you might get 2 out of 5 being a trend day. On a good week, you'll get more than that. But days like this, I mean, there's nothing. I'd be very surprised if anybody anywhere made any money today on the Dow. Because by the time you've got a candlestick signal to go long or short, if you're trading on candle close, today you would not have made money. If you're trading preemptively before a candle close and you were trying to grab this low before the candle close, then yes, you probably would have had a chance. The only trading opportunities you had here today were shorting somewhere up here. You wouldn't have known that was a short, really, until you got down here somewhere, in which case then you would have gone short there. Where's your stop? You couldn't use stop above the highs. Yeah. That low on the 5-minute opening range, the double bottom bounce was a trade long. That would have worked. That bearish engulfing you took on a rejection of that high, you got that much out of it. Yeah, it's just, you know, days like this, you just get chewed up. Can't do anything with it. They're just pains in the backside. Just got to live with them, unfortunately, and deal with it. Morning from Tulsa, Brian. Afternoon, even. Hamza. Set buy and sell limits and follow the market in the range. Yeah. You have to assume, I mean, and that's the other thing, isn't it? Mean reversion works brilliantly in a range. What happens with mean reversion is, let's say, for example, we set a sell limit here because we saw that and that. We set a sell limit there. We've just triggered it. Now we're short. We're short with our stop above the high. Now it breaks out. The trouble with mean reversion, the trouble with range trading, which is why I say I'm a mean reversion trader. I'm not a range trader. I don't trade ranges. I mean revert. Difference. Range trading, you will have to take those trades there. By the time you've identified a range, you need at least 3 or 4 points to identify a range. Yeah. So right here, 5-minute opening range is there. We pushed up, made a high. We pushed down, we made a double bottom. So we got 1, 2, 3 points. 4th, we pushed up, rejected it. Okay, brilliant. Range established. So next time we get up here, we'll short it. Next time we get down here, we'll long it. What's the likelihood now of a breakout happening? Probably quite high, because we've been in a range for an hour and a half. So by the time you've identified a range and you start to mean revert the range breaks out. You can't win. This is why you don't use a stop loss. Because whatever you do has a 50-50 chance. If you are mean reverting this range right now and you're short with a stop loss either there or there, your odds right now off the back of this candle are 50% as to whether this thing is now going to go down or up. If it goes up, you get stopped out. If it goes down, where do you take profit? It's got to be at least 1.5 R, isn't it? So down there. So if this thing now decides not to stay range bound and make a new range low down here on the previous 3 range lows, that trade won't work. Therefore, we have that problem. We can't predict the future. Stop trying. Can't do it. The edge of the opening range breakout strategy is that when we get our opening range breakout that flies, we make a fortune. The other days, we don't. Long term, you will get more flying range breakouts than you will those days. However, the market has to be in the right conditions to do it. And at the moment, it's just not, because the market hasn't got a Scooby-Doo what to do, has it? Just doesn't know where to go at the minute. So it's just, not right. Are rotation days predictable? No, nothing's predictable. Like which day of the week? No. If it was predictable, I would predict it. Either if every Wednesday it went into a range, every Wednesday I would wait for price to push up, wait for it to push down, and all I would do is put a limit order there and a limit order there. So would everybody else in the world. We will be billionaires, wouldn't we? You can't predict anything. It's a random thing. Last 3 Wednesdays, it went sideways. Yeah, this Wednesday, AT&T's earnings are out. Do you think this Wednesday, AT&T's earnings are out? The thing's going to go sideways? Probably not. It's going to go through the roof, up or down. I'm not saying that AT&T's earnings are not out this Wednesday. I'm just making it up, but I'm just using that as an example. What happened last Wednesday has got absolutely nothing to do with what's happening this Wednesday. What happened yesterday has got nothing to do with what's happening today. Because today we've got different market conditions with different market participants and different things happening in the world. Tomorrow, we've got CPI. The Forex market is not going to do the same thing as it did today tomorrow because we've got CPI and interest rates being announced for the Canadian dollar. It's also not going to do the same thing as the last time the Canadian interest rates were announced. It's going to do something completely different because last time the Canadian interest rates were announced, all the other currencies had different interest rates and the strength between the two was different. Therefore, you can't say this year or this month, if we get bullish Canadian interest rates, it will do this because it won't do the same thing as last time because the market conditions are different. It's a random event. Every time that candle closes on the screen right now on the US 30, it's a random event. I can't tell you, and no one in this world can tell you with 100% certainty whether that will close bullish or bearish. So if you're trying to predict that as a trader, you're going to fail because you can't. It's like walking into a casino and knowing whether there's going to be a blackjack come up at that seat at that time. You can't do that. So you can go and sit on that seat, but your odds of a blackjack coming up are X. Your odds of a candle closing bullish or bearish are 50-50. Although there is that odd doji. Yeah. So your odds of a bullish candle or a bearish candle are 50-50, apart from when you get one of those. But have a look on the chart. How many of those have you had? 2. So every now and again, you'll have something where you don't actually have an edge. Or the market doesn't have an edge over you, rather. Can't predict anything. Was pound odd already a topic? Yes, it probably was. Long pound odd at the moment. Sorry, extended rather on the daily. Nowhere on H4. Just come out of an extension on the hourly. Just touched it. Sideways. Have just taken out the highs of last week though. So potentially putting an M pattern reversal down to here. We've also got that propulsion, this whacking great one down here as well. So there's more downside targets on the pound than upside. There is none to the upside. So I'd be looking more for shorts than longs at the minute. It's just not in the right spot for me at the minute. Cromwell. Just found your sites and live trading room today. Any ideas if you will have the scaling into trades function for the MT5 version of the Price Action Toolkit? No, couldn't get it working, couldn't be bothered. It's just, MT5 is just a pain in the backside. I probably could if I spent a lot of time on it, but to be honest, you don't really need it. The Price Action Toolkit is a manual trading tool. It's buttons, basically. All the Price Action Toolkit is buttons. Yeah. That's what it's used for. So if you get into a trade with a buy stop and it gets triggered and you want to get in again up there, just hit the buy button when it gets there. You've got to be trading it manually. It's not an automated... It's not designed for auto trading. It's designed for manual trading. Manual scalping. So I wouldn't I'll probably have a look at it at some point when I get some time and try and figure it out, but I spent ages figuring it out and it just didn't work in MT5 and I don't know why. Honest answer. So I scrapped it. Rut-roo, Brian. I don't know what that means. Mumo, curious, is there a setting to adjust the opening ranges of the opening range breakout EA? A setting to adjust time? The opening range breakout EA works on candle close at specific times. So there's your pre-market 15 opening range. There's your 5-minute opening range. There's your 15-minute opening range. So that's how you adjust the ranges. Do you mean filter? If you mean filter the ranges, yeah, there's a filter. So you can say, I only want ranges of a minimum of 1 pip to a maximum of 5,000 pips in this case. So you can adjust the maximum opening range or the minimum. So you can say, I've got to have an opening range of at least this or up to that. But apart from that, it's, you know, it's timing. It's a time-based EA. So it works off of what the range is after a specific time period. Right, Dow's pushing the highs again. Filter, yeah. Yeah, so it's got that filter in there, yeah. The reason I introduced that filter, but this is the thing, I introduced that filter for testing purposes because I wanted to do with just testing higher day on the Dow. I wanted to test the size of the opening range and the impact the size of the opening range has on whether or not it goes or not. So I tested lots of different opening range sizes. What I found was it doesn't matter really which of those you use, because if you get a big opening range, what you can't determine is whether that big opening range candle is a massive bull candle like that, or if it's a doji like that. And we've opened, pushed up, pushed down, and closed back in the middle. Yeah. So if you say I only want a 600 opening range, for example, those are both true. The chances of this first one being a runner for the day and an absolute screamer are way more than the chances of that one being an absolute screamer. The chances of this second one actually breaking out of the range could be half an hour before it even gets to one of those points. This one, it's only got to move 2 pips and it's off. So what I actually found after quite extensive back testing was it didn't really make any difference. The only thing I found it useful for is picking these tiny, tiny little ones. So when you get, and this is more relevant on the DAX, if you look at the DAX, sometimes on the DAX, today wasn't too bad, but sometimes what you find is, can't see that candle, can you? Whoop. Sometimes what you find on the DAX is we have an opening candle that's something like this. Yeah, it's a tiny little candle. What I found it useful for is filtering those out. So saying if we've got a tiny little candle at the open, what that normally means is the market hasn't got an opening cash balance. There's no orders there, meaning there's no liquidity. If there's no liquidity, there's highly unlikely there's going to be any movement. So it's useful for filtering out those, in the fact that if you see something only open with like a 10-point range, it's not likely to go mental today. It's probably just going to go, all right, we'll have one of these tiny little days. However, you find days where you have a tiny little opening range, and what it does is it moves down 2 or 3 candles, up 2 or 3, down a few, and then it comes back to there where it was. If you actually measure that, that's probably a 3R return. So they're actually good to trade as well. So again, you can filter those out, but you're going to miss some. Like I say, opening range breakout is a breakout strategy. So it either does it or it doesn't. Like today, there was your opening range. There was your breakout, retest, drop, gap fill. That's what we looked at this morning as being the play today, was the gap fill, which is why there's whacking great purple boxes on there. And it did it. But look how messy it was. The way we make the most money on these is the days it goes like that. What we call a trend day. And at the moment, we're just not getting these trend days. It's struggling. But that will change, it will change. It will go back to being trend days again. Dow's rocking. I think I might blow one of these accounts today. 4.4. Oil is everything's pushing against me in totally the wrong direction all at once, unfortunately. I'm just about to stop out on 2 more of those, which will release some pressure. So where's this Dow going? Let's have a look. So if we're going out the highs on the Dow, we're going to need to go out to the 4-hour time frame to find a new level. So this previous high, which was 4th of April. So this is what we're testing at the minute. So if we get that break and we're off from there, we need to look at where we're heading. And basically, we're heading up here, aren't we? So if the Dow high breaks today, that is where you would be looking. Probably let's put it down onto that wick there. Whoops. Yeah. So got those 3 points there basically, which is 250 ADR away. So we're either going to hit that and just continue to be range bound at this level, or now we've broken that, we're going to pull back, retest it and push. In which case, there are so many stopping points here, you can't pick anywhere. So it's a case of jump in and try and get some movement up to those highs. But we watch this today. Yeah, we may well reject this level, which we're testing at the minute. So the next hour, if we get a bearish engulfing in the next hour, potentially we're going to come back down and retest this level. If we don't, and we basically push up and just hover around a little bit or flag, we could potentially break out and go for the longs. So this could be a big run starting on the Dow. However, when you look at something like the DAX, which will be pushing, but obviously not to the same extent, the DAX has got an argument for being short. Yeah, do you know what I mean? Everything at the moment, there's no continuity. We're used to seeing with all these indices, everything in the stock market moving along nicely together. At the minute, everything in the stock market is all over the place because we got sectors failing, we got sectors rallying, we got all sorts of stuff out of sync. It's very difficult to predict anything, isn't it? So therefore, how do you predict US dollar movement when you've got all the indices telling you different things? This is why everything's in such a sort of rangy sideways land at the minute, is because there is nothing in control at the moment. Everything is all about interest rates, and we're getting to the end of those rising. So it's all going to change soon. If only we knew when. Jonas, thanks, no problem. Whatever it was for. James, what setting adjusts the TP in the ADR reversal set file? Struggling to find it. In the ADR reversal set file. We're not using a fixed TP. Yeah. So TP mode is set to false. So it does not use that. It uses the position trading or the basket trading settings, all of my set files. So if you're using any set file that I've produced, I do nothing but position trading. So I don't use any fixed TPs or fixed stop losses at all. So everything I do is based on movement within the market. Yeah. So the basket trading settings here, it's these settings here. So close all when X money in profit. That should say it's got an N missing, but that's set to 250, which for me is 0.25%. Yeah. Or 0.3 ADR, which is 30% of the average daily range. Close in profit at percent of ADR. Yeah. So those two settings are what decides when the EA closes it. And it doesn't matter if there's 1 position, 5 positions, or 10 positions, or 100 positions. Yeah. This is sorry, this is what is in control of closing the trades. So at the moment, what this is doing is it's getting in with a position. If it pushes half an ADR, let's say we're short, if it pushes half an ADR against us, we take a second entry on the next reversal alert. If it pushes another half an ADR, we take a third entry on the next reversal alert. It's multiplying the lot size by 1.3. So it's increasing by a factor of 1.3. It's doing drawdown control automatically when the market pushes against. Yeah. So here, when the market is pushed against us by 1 ADR, it scales out of 30% of the position. Yeah. All this is designed is to keep the average as close as possible to where price currently is, keep us within an ADR so that we can get out with a third of an ADR in profit. Yeah. So your profit is here or here. And the reason I use both, yeah, is because if you have a single position on, it depends on your risk parameters as to whether or not you will hit $250, for example, or a third of an ADR first. If you've got one position on and it basically gets in and drops by a third of an ADR, it gets you out. If you get a position on and you need 3 positions on and you've got a lot multiplier, $250 profit might be there, right? But a third of an ADR on those 3 positions might be here. So what it's designed to do is get you out with a monetary value first if a third of an ADR is further away. So you can adjust and play with these settings, but basically I'm happy with the ADR because the ADR is a quick in and out. It's designed to be in and out same day, if not next day. If it's not in and out same day or next day, it's going to turn into a position trade. So it needs to then be managed. So what I'm after is quick, grab me 0.25% or a third of an ADR in movement. We know that 58% of the time the market spends within its average daily range. If it exceeds its average daily range, all I'm asking you for is a third of that back to get me out. So market pushes hard, pulls back, runs. That, most of the time, you'll find will be a third of an ADR or more. So if we're going to put in a push, pull, push, that gets me out. If we put in a push, reversal, I'm out anyway, aren't I? Doesn't matter if it goes down and gets below. It's fine. If it pushes an ADR and pushes an ADR the other way, brilliant. I'm still only going to take a third or 0.25%. Because ADR gets hit a lot more, obviously, you know, ADRs today, we've had, what have we had today on ADRs? 1, 2, 3, 4, 5. So there's 5 trades there today, look, on ADR. So if all of these ADRs today go push, pull by a third, that is 1.25% profit in my account. Thank you very much. That's what it's designed to do. You're going to get ADRs here virtually every day. There's very few days in the live room I'm in here where we haven't got an ADR. They do happen occasionally, but it's very rare you don't get an ADR hit in a day. Something's going to hit ADR because something is always being manipulated and moved by the banks at some point. So they might be working the euro today. Tomorrow they'll work the US dollar. The next day they'll be working the Swiss franc and the yen because there's some kind of scare. So those will be manipulated. So there's always something that's going to hit ADR. All we're doing is we're saying, if you're going to hit ADR, i.e. push outside of the normal extremes for that currency pair, when you take profit, I'll have some money, please. That's literally all the ADR set file is designed to do. If it's a fundamental shift and we've hit 200 ADR because something has changed in that instrument, we may well do that, i.e. flag break for another leg. If that is the case, I'm going to need to get in again. But I want to be out as fast as possible. I'm not going to get greedy and go for an ADR or get greedy and go for $1,000 profit. Yeah, I'm going to get out as fast as I can because I'm wrong. Don't forget, every time we get in without a stop loss and it goes against us, we're wrong. Yeah, you can only be wrong for a certain period of time until your account gets into distress. So you need to be out fast, which is why the targets are kept within half an ADR the vast majority of the time. Or a obvious propulsion gap. Yeah, so things like, what have we got? Euro New Zealand at the moment, yeah? So look at the Euro New Zealand on M5 today. Yeah, we've got an ADR to the upside. You're going to get a reversal alert on that shortly. You've already had a reversal alert here. There's, yeah, well, there it is. You can see my entry, the red one. Red line is my entry. So I'm looking for a third of an ADR to the downside. So from there, it's 74 is half. So it's going to be around about 50 pips. Something like that. So somewhere around here. Yeah. Propulsion gap. Propulsion gap. Big propulsion gap. Little propulsion gap there. That's kind of done. Yeah. So those are your targets. So that's your furthest away propulsion gap on M5. That's a closer one. That's much closer. So if we get in here, that's all we want. How easy is that? If you wanted 1.5 ADR out of it, you've got to hope that this push we've just had is just a false move and they're going to reverse the whole thing plus some. A lot harder to hit. Yeah, so we're in, we're out with whichever we get to first, either 0.25%. ADR New Zealand Swiss. Let's look at that one. Yeah, ADR's just been hit on New Zealand dollar Swiss. Where's this thing going? Here. Yeah. So if we get in with a reversal alert there, a third of an ADR on this, half an ADR is 31, quarter is 15, 20, call it. If we get in there, that is 31 pips. That's half an ADR. Whacking great propulsion gap break there, look. It's definitely coming back to retest that. That's half an ADR. Easy. If we just go for a third of an ADR, we're going to get out somewhere around here. Easy. Yeah. This is M5 entry, yeah. Let's mark it up with, let's say we get in there and go for 20, no, let's call it 22 pips there. Let's just move that line up. That's about 22 pips. Jump up to 15-minute time frame and look at it in the grand scheme of things. Accumulation, break. What happens after a breakout? A retest. All we're looking for is profit on that retest, that mean reversion. It's fast, in, out, done. Easy to hit. This thing could easily push all the way back up into there, and it probably will. It will do at some point, won't it? But we're not going to sit and be that greedy because we want to get in and out and in and out and in and out, and we want to build that bank as fast as we possibly can. We just want to keep sticking cash in here because if this gets out of control, we're going to need it. If it doesn't get out of control, we're going to make a massive amount of money this month. But we don't control whether we make a massive amount of money, do we? The market does, because we don't know whether it's going up, down, sideways, or when it's going to happen. Make sense? But that's where you find it. Both of those settings are disabled in the default set file. In the default set file, yeah, it will, yeah. The default set file is nothing. You don't use a default set file. Seems to be taking profit at half an ADR, but I can't find what setting. So yeah, it's those ones, basically. It's definitely those. There's only two ways the market reverse alerts EA will get you out of a trade, yeah? It will either get you out with this set to true, and it will put a fixed hard take profit in the market as a line. When it hits that, it gets you out. Yeah. If that is set to false, it will use these settings here. Yeah. So it will use those settings, all of them. Close all when X pips, close at loss, close at money, close at ADR. Yeah, whether it be a positive or a negative. It will get you out when those are hit, when the sum of the P&L hits these, either in pips or in monetary value, that's when it exits. There is no other way this can possibly exit the market, apart from if you had it set to get you out on opposite trade, close on opposite alert. Other than that, there's no other way this gets you out. So that is not partial profits. So that will be set to half an ADR. Which, if you got the set files from the website, those will be, yeah. But I mean, all the set files I ever put out there are these work, but nothing works on autopilot 100%, does it? Yeah, because everything I put out there is a back test, and a back test isn't going to happen again in the future. So it will give you an idea of what to expect, but it won't tell you what's going to happen, which is why we monitor everything on here and deal with what's going wrong. Again, there's still nothing going wrong at the moment, enough for me to worry about. So, Anna, can you tell me why I don't get you on my main page on YouTube? I don't know. Maybe because you don't like me enough, Anna. I don't know. I don't control YouTube. I don't know. I have nothing to do with YouTube's algorithm. Probably because I don't spend any money on marketing. There you go. Greg Secker, Nirav, all the people that spend fortunes on marketing on YouTube will be on your main page. But that's why you hit the subscribe button and the like button and the bell button, because then you'll get notified when I'm on. And if I put any videos out, obviously you get notified. So you got to subscribe. Nobody subscribed in the last 5 days. That's because I haven't been here. Vince Albano was the last person to subscribe 5 days ago. Sad. Nobody loves me anymore. Wall Street Trader. Love your trading and your indicators on MQL market. Keep it up. Cool, will do. What's the time? 20 to 5. Right, so this doesn't seem like it's doing a lot that's going to help me today at the moment. So Breakout is being retested. So there's your propulsion gap break, which is being currently bought up. So we'll see if that holds. Market structure is just a mess, isn't it? High, low, lower high, higher low, higher high. Now what? I would suspect that, but we'll see. Hopefully not. James, figured it out. Naught is disabled. I was reading the word disabled, thinking I was turning off. But there is a 0.5 in there, which is doing it. Right, okay, cool. Yes, always those settings. ADR on oil. Oh, God. That's not good. Right, so there's your ADR hit. So I've just scaled out of some oil. That's the Dow. Sorry, I've just scaled out some more Dow, and the oil I've just got into another position. So again, this is kind of point of last return on oil. Point of no return, if you like. So it looks to me like they might be orphaning this gap fill at the moment, but we'll see. Obviously, it can come back down just as fast as it goes up. So I only need literally two down candles, and I can exit the whole thing, which I will probably do because this account's getting squeezed. But we'll see. So we've got big propulsion gap target now there. So I'll take one off when we get down there and we'll see what happens with it. But this might go now, oil. So that's your next target to the upside on oil, which is 150 ADR. So this is obviously what I was looking for was a pullback long, and then we gapped. I'd be amazed if they left this in play. I really would. We haven't had a gap that big. There's the last time we had a gap that big. Look there, straight away. We're what, 2, 3, 4, 5, 6 days into this now. I'd be amazed if they don't fill this gap. But it's oil. I don't really trade oil very much, so maybe not. But if you look back historically, you won't find many gaps like that are not filled in the past. Yeah. It just doesn't happen. We just don't get that in the market. That's in what they obviously call an inefficiency. The market has not traded efficiently there. There are people at the moment who are short-sided on this, who need that filled to exit their positions. And what I mean by people is banks and institutions that are offside on this. They don't lose money very often because they can move the market. But oil, obviously being a commodity, has a different life cycle to everything else. So that high, exactly where that order is either going to be the double top in the range. Yeah, we were talking about ranges earlier, yeah? By the time you've identified a range, it's normally when it's about to break. Obviously, we had 6 days to identify this one, so it's been there a while. But so I'm looking for a playback down to range lows. If not, we'll be out the highs and I'll be stopped out. So I'm just going to put some stops in on this. I'm going to give it a little bit of breathing room on that position. That one. These are all 0.5% stops. 225. Actually, yeah, I'll leave it at that. Still happens with oil. Either will or it won't. We will see. You need to check out Mamba FX. Just say Lambo. Mamba FX. Have they been advertising to you? Mamba FX trading. No information is available. Oh my God. Right. So first thing I see when I land on this page, bling. Right. His bling is silver. Mine's gold. We've got gold bling. Way better than him. And he makes his money as a YouTuber. He's shouting about the fact that he's got 100,000 subscribers. Good one. Can't trade for shit. And he's got a Lambo. Good rental. Or photoshopping, either or. It's good photoshopping probably, isn't it? And he trades on a mobile phone. Good one. And he sells signals. And a pip calculator. Christ, this guy's advanced. Get the app. That's a great one, that is, Lambo. That's a great Lambo. Click here to get funded. With what? Right. What were we talking about? Was it this morning? Or this afternoon? Yeah. This is fmstraders.com. This used to be a prop firm. There used to be an 8-cap prop firm. This is why we don't use new prop firms. They will go pop. Is he still advertising? He must be still advertising. I don't look like one I mess with him, actually. He's probably got a shooter in his pocket, hasn't he, by the looks of the tattoos and stuff. So I'll be nice to him. Oh, Mamba FX. $329,000 views. Yeah. 244,000 subscribers. He's only got 80 videos, for God's sake. That's fake. He's like, I've got over 500 videos. Right? This guy's got 80 videos and he's got 244,000 subscribers. And a Lambo. Anything you ever see, look at that. Look at that for a thumbnail. Look. Making 70,000 in only 15 minutes trading Forex. Gotta love him. Gotta love the Lambo brigade. And his wife spends what she earns. What he earns, probably, yeah. Yeah. Anyway, enough said. Right. We've just broken back down inside the range potentially on the Dow. Who knows today? This thing's all over the place, but everything's moving. So that's all good. We got decent movement everywhere. Oh, look, I just banked some more. Very nice. Seeing in some drawdown now, though. So we've got a few things slightly getting pushed. So want to be careful tomorrow. CPI before the open of New York. We've got Bailey speaking half an hour before the open, and then we've got the Canadian interest rates half an hour after the open. So busy day tomorrow, and that's all ahead of FOMC. So this is not an FOMC press conference or rate announcement. So this is just FOMC meeting minutes. So unless there is something in there that the market was not expecting, we won't get a lot of movement off of this. So just because it's an FOMC doesn't mean it's going to be a big market mover. The reason we have FOMC move the market is when we have interest rate announcements followed by FOMC meeting minutes, followed by a press conference. And the press conference is what makes the move. So this is literally just meeting minutes. You probably won't find we get a lot out of it. We can do. Depends what comes out in the minutes, obviously. But be prepared tomorrow. It's going to be a busy one. And then we're straight into unemployment for the Aussie the next morning, and then GDP for the pound before the market opens. So we got a very busy 24 hours ahead. So market's moving around quite a lot today off the back of the bank holiday. So fair bit of opportunity there on extended instruments. So if you're not in it, there's plenty of opportunities out there to get in it. But I'm in everything, so I should wait. Nah, she trades, and his wife spends what she earns. She trades as well. Probably. I'm numb to it now. I've been subjected to it for 15 years, the Lambo Brigade, and yeah, I'm numb. I need to get a John Wick driving a Lambo. That's what we need. John Wick driving a gold Lambo. That's what we need to get as a meme. Yeah, we've got plenty of John Wicks, but we need one of him driving a Lambo. We got the John Wick coin, the John Wick spinning coin, John Wick and his dog and his goat. Where I got that one from? Mr. Serious John Wick with the very, very broken hands. We've got John Wick in his Crocs. John Wick making a lot of money out of FOMC and non-farm payroll. And John Wick blowing his account. John Wick seeing into the future with his magic 8-ball and his gold jacket. We need John Wick and a Lambo. That would finish the day off, wouldn't it? John Wick and a Lambo. They catch the noobs. Yeah, I know. Yeah, that's the trouble. Everybody's got to be a noob. I would be so good as a Lambo Brigade because I actually know what I'm talking about. Can you imagine combining someone that knows what they're talking about, makes logical sense, and the promise of making $70,000 in 15 minutes? I'd be a millionaire. Not through making trading decisions, but people buying crap, wouldn't I? Be amazing. Don't tell the wife. She'll want me to do that. Right, I'm going to leave it there because I've got to go. I've got a class to go to. I'll be back tomorrow, same time, 7:50 for the Frankfurt session and 2:20 for New York. We'll have a look at how everything's gone. Lots of positions on at the moment, so lots of stuff that can mature. Is your chair out of a Lambo? No, my chair's out of the devil. My chair is from hell. So yeah, lots of positions on at the moment. We'll see how the squeezes go. But I'll be back tomorrow. Anything you need, come in the Telegram group. I'll be in there. Otherwise, I will see you guys tomorrow. Have a good day and evening.